Hello, everybody, and welcome to the ARMR Investing Way, the one stock chart off of our trading desk today that we think demands your attention. And today it's going to be really an easy discussion. There's one stock we want to look at, not necessarily to buy right now. This is already in our portfolio. We're crushing it on this stock, and I want to walk you through why. So when we go through other conversations like this throughout the week, you'll understand how we execute. Your job and my job is to be the smart money and to stop listening to the noise around us. Our job is to execute like an institutional money manager. This is why we call this a virtual hedge fund experience. I ran hedge funds for a decade. I've been running private capital for over 30 years. I'm sharing with you how I run my own personal capital. You are the portfolio manager on the desk right now. You figure out your risk tolerance, your goals, and you execute to match that. Okay? Your job is to stop listening to the noise around you and execute a strategy. So I'm going to show you the number one chart off of our desk today. Right now, here it comes. Tesla. Tesla is the number one stock on our desk today. You know why it's the number one stock on the desk today? Yes, we're crushing it. We're making a lot of money on Tesla. But I wanted to share with you this thought. Last week, there was a lot of stuff running around the internet, running around Twitter, whatever, talking about how Tesla had been up 13 days in a row, and it had never done that in the history of Tesla. And people suggested that would be a reason to sell Tesla. Okay? I chatted with you last night, right? Every Sunday, this was Monday because the market was closed, but every Sunday at 7 o'clock, we have our week in review where I go over charts with you that are stocks to buy, stocks that are in focus, stocks that are on our watch list, and we all get ready for the trading session. And during that meeting yesterday, there was a comment about how somebody was exiting all of their NASDAQ 100 big tech names and moving the capital into commodities because there's no way tech can go up anymore, right? And I understand that's what everybody's saying, right? It's overbought. It has to come down. It can't go up anymore. And what I submit to you is that until you stop listening to that swill, you will continue to underperform your abilities. Your job is to get rid of that noise. If you find yourself making a decision because you're sure this can't happen, this has to go down, this is overpriced, this PE ratio is too high. If you're making your decisions on those statements, which are pure guesses, you're acting like a retail investor. And an institutional investor and a hedge fund manager knows that when you see Tesla up 13 days in a row, and when you see the market overbought really fast, that's the beginning of a bull market. That's the beginning of a bull market. Bull markets get overbought quick and stay overbought longer than anybody could stand, except for the guy making money, except for smart money. Now, you may say, well, Brett, you're making a prediction. Hey, I'm not. This is what we do on our desk. Let me show you how it works on our desk, okay? The entry point was down here on Tesla, and right there as it popped above the 50-day moving average. Okay, this was a bottoming wedge. We bought the move above the 50-day because our algorithms were telling us to get long. It doesn't have to be what I think. If I'm making a decision on what I think, I've already lost. The market doesn't care what I think. It doesn't care what you think. Price action is all. So when it pops above the 50 and our probability algorithm tells us it's going higher, there's a high probability that this asset's going higher and the reward is worth the risk. We just execute, and we use stop losses to protect. And so this is our stop loss right in here, okay? I'm going to share with you a stop loss. It started off here, this red line. I said, hey, we're getting long right here. If it breaks down, we're out, right? Then it popped up to the 200-day moving average. We said, hey, we're going to raise our stop right there. It popped up when it extended on that day. We said, okay, now our stop is right there. If it comes back below the 200-day, we're out. It can't go any higher, right? It's going to get rejected at the 200-day moving average. That's what everyone was telling me when it was going above the it's going to get rejected. How do you know? Right? Okay. Now it's skyrocketing. And what we would do is raise the stop to the low of the gap up bar. That's one place to go. And this is why I wanted to share this chart with you today. Okay. This is the most important chart in our desk. Some days at 4 o'clock, I'm going to tell you we're buying the stock today, right? Other days, I want to go over with you how to execute correctly. When you feel the urge to sell something because you're sure it can't go up anymore, recognize that that's emotional. And what you want to be is executing a strategy that's not emotional in a world that's more and more controlled by algorithms and AI. The human has to execute that way or you're going to get fleeced. So what we do at that moment when we feel sure it can't go up is we find the correct stop. We put in a sell stop. We accept we're not going to top tick the stock. We accept that there could be a gap down in the morning, takes us below our stop. Okay, sometimes we'll lose a little bit more than our stop. We get it. But this is the takeaway for today. In order to be really successful long-term investing, you must ride your winners. They're going to pay for a bunch of losses. We're all going to have losses. If we don't maximize our gains on the long side when we're right, it's going to be very hard to create alpha in a portfolio and outperform to the potential that you can. You're probably making a lot of great decisions right now. And when you look at your P&L at the end of 3, 6, and 12 months, you go, why didn't I make the money I should have made? It's because of your execution. Get away from the emotion and the guesswork and execute a strategy. Now, guess what? We have a free trial right now. You can join us on the desk all day for 5 days. And I'm going to walk you through how we set up this strategy. It's a very simple, methodical strategy that takes emotion away from what we're doing and allows us to execute like a professional. We're the smart money. Let everybody else worry about the guesswork. I hope you guys enjoyed this tonight. If you did, don't forget, you can always subscribe to this channel right down here. Join us on the desk. If you want to join us on the desk, you can do that for 5 days free now through our free trial. I wish you guys a wonderful night, and I'll see you here tomorrow at 4:05. Today was 4:10, 4:05 for the #1 chart of the day. What will it be tomorrow? Who knows? I look forward to seeing you guys tomorrow night.